Welcome to the Good Reading Podcast, proudly sponsored by Book People Gift Cards. A Book People gift card is the perfect gift for readers of all ages. Simply order your gift card online at bookpeoplegiftcards.org.au. Redeem at any one of over 500 bookshops across Australia. Visit bookpeoplegiftcards.org.au. Sydel Sierra is a crypto investor, educator and founder of the digital wealth group, Crypto Women and the Seeds of Greatness project. Today I'm talking to Sydel about her new book, All Time High, The Power of Cryptocurrencies and How to Invest the Right Way. Sydel, welcome to the Good Reading Podcast.
Cool. Thank you for having me here today, Greg.
The opening pages of your book promises, and I quote, a down-to-earth explanation of what cryptocurrency is. Now, this is one of the great obstacles to those who might be inclined to invest in cryptocurrency. So, okay, I'm ready.
What is cryptocurrency? It's the big question on investors' minds, especially when they're coming into this asset class for the first time. But basically, cryptocurrency it's a digital form of cash. It's an investment class, and many people do look at cryptocurrencies and either invest into this market or they use the technology that is happening. So think of cryptocurrencies as basically digital money and that you can invest into.
When we exchange cash, everybody knows what it means. How do you convince somebody that digital cash is verified in the same way that a banknote might be?
This is what made cryptocurrencies so fascinating, because it provided trust in a digital world. And the more digital we get, the more trust we need. So this is what blockchain technology has offered. It's basically a public ledger. It's an Excel spreadsheet that can never be edited, and it provides this trust. But essentially, it's like peer-to-peer transaction without a middleman, without the need for a bank. And this is why people love this asset class so much.
Always interesting to discover why people got into this world. How did you get into the world of cryptocurrency investment?
So it actually goes back to 2016. I was introduced to this fascinating world by my mentors. I was actually accepted into a wonderful training camp for young entrepreneurs and for self-sovereignty in 2016. And it was actually held in Northern Europe. And there were thousands of people that applied. I actually was lucky enough to get accepted into this training with 50 other individuals. It was run by millionaires and billionaires, and they were buying 5,000 Bitcoin at a time over lunch. And I said, what do they know that I don't? Okay. And at that point, I was also working full time, and I was really looking for something else to create something different. And I thought, oh, if I keep doing what I'm doing, I'm going to be working forever. And whilst I was only in my 20s and having that thought, I was planning ahead, let's just say. So I ended up studying cryptocurrencies. And I remember the first time I ever heard that, I went, crypto, what? So it was such a new concept. But they were saying that the future is cryptocurrency. The institutions one day there'll be global level adoption. This will be the future of money, and to see and witness what they were and how they were investing really piqued my interest. And that was the beginning of my crypto journey.
In your book, you suggest that a currency crisis has been coming for years. What do you mean by a currency crisis?
Great question, because if we have a look even at the national debt clock for the US, I mean, it's a ticking time bomb. We call it a runaway train, and we only have to see the loss of our own purchasing power through inflation that's going on right now. And I always say to people, if your money isn't keeping up with at least 10% inflation, then you're technically taking a loss every single year, and your purchasing power is getting eroded. So what are some other options? Where are some other options that we can have to stabilize that, or to at least maintain our purchasing power? So the currency crisis is really much the debt, the printing of money, the interest rates, the inflation, just the geopolitical uncertainty going on in the world right now, bank foreclosures, and just the whole change in the economic front that's going on right now. So this is why people are sort of, despite crypto's volatility, are looking for this flight to safety, looking for a financial plan B.
A search for independence too, isn't it?
Very much so, because there's so much fear around, what is next. And we've seen what's happened over the last few years and how our freedoms and liberties can be taken and given just like that. And what if there was a way where, you could remove yourself from that narrative and just have some financial plan B, or have a bit of peace of mind, or another option outside of what we may think to be the only option, which is, I think, why people and investors move towards that crypto environment.
Is it a kind of untethering ourselves from financial institutions like banks?
Well, it's a double edge because at the moment you've got some of the biggest adoption happening from the institutional front, which is centralization, which is banks, which is all of that. But at the same time, we absolutely have this untethering, because if you rewound the clock 20 years ago, no one in their right mind would ever, or no one would have ever believed that we could borrow money without a bank. We could have our own cryptographically secure bank account with no middleman. We could generate loans in a matter of seconds, send money across the world for a fraction of a penny with no bank. It just seemed unthinkable. We're moving away from the legacy system, which is our banking system as we know it, and into something new and exciting and very much in control. Like, we don't have to answer to anyone. We don't have to prove things. It gives people a level of privacy. It just gives people options.
You equate cryptocurrency, or Bitcoin in particular, with gold because it has, like gold, a capped supply. But people are always going to ask how you can equate a physical asset like gold to a digital asset like Bitcoin.
That is a question a lot of people wonder, because we know our precious metals so well. We know our silvers and our golds. We know the value that they bring. And really, one of the questions is, why did Bitcoin become on par with gold, and how were they both recognized? And it's by looking at what's called the store of value market. And the store of value market is something that always takes off during economic recessions or during economic upsets. So what happened in the pandemic? We saw Bitcoin and we saw gold take off. And if that happens enough, then people look at that asset class as now something that can be recognized as a digital store of value, and enter into that store of value market alongside things like precious metals and other store of value items like artwork and cars and things that hold their value during economic unrest. And that's very much why Bitcoin has been termed the gold 2.0, because of its ability to sort of flight people to safety despite its volatility.
And that brings me to the very next question, which is about supply and about that process of halving. And halving is basically a software update. Can you explain what that is and how it affects the value of Bitcoin?
Yeah, so a lot of new investors might think that the halving means the Bitcoin they're holding in their wallet is going to get cut in half. And I said, it's definitely not that, okay? It's just the amount that are coming in to the circulating supply and available for purchase. So for example, if I said to you, all the gold in the world in 2 months will be, the rate at which it comes into the market will be cut in half. What do we think is going to happen to even just say the price of gold and etc. So it's a major triggering event in the market. But that happens every 4 years, and it is actually pre-programmed into the code. No one can tamper with that. It can never be changed. It's not maybe it might happen this year, maybe it won't. It is pre-programmed into Bitcoin's design. Every 4 years, the amount of Bitcoin created will cut in half. So it's a deflation, what we call a deflationary asset. And that will continue right up until 2140, the year 2140, and when the last Bitcoin is mined. But there will only ever be 21 million in existence ever. And that's all pre-programmed. And every crypto has their law that they're sort of born with, you could say.
Now, your book focuses mainly on Bitcoin. Why Bitcoin in particular? But also, what is Bitcoin's relationship to other cryptocurrencies like Ethereum, for example, which is another one other people might have heard of?
This is what I love about crypto, because we only need to really look at one crypto, and that is Bitcoin, to determine what is going on with the whole market in general. So what happens to Bitcoin has a broader effect to the whole market. So if we can study and understand what Bitcoin's doing, then we can understand when the best times are to enter and to exit. And when we know all of the other crypto coins in the market are going to be sitting at nice prices. So Bitcoin is always been the leader, and it's also the reserve cryptocurrency. So it's the one that everyone looks at, and it brings in the millions of new users and trillions of capital. And then eventually it's like an overflowing cup. It pours into the broader market. That's why we love Bitcoin and study and understand that. So that is the main value that Bitcoin brings. But by any means, there are thousands of amazing cryptocurrencies, not just Bitcoin. And that's just the sort of the brand face of cryptocurrency.
My next questions are really about investing in cryptocurrencies. And the obvious one is, why should people look into cryptocurrencies as an investment option when more established funds, whatever they might be, possibly safer options, like superannuation, for example, is their most obvious one, why would they invest in cryptocurrencies when these other things are available to them?
It's a great question. It really comes down to the risk tolerance of people, but also understanding that cryptocurrency is now considered the fastest appreciating asset in human history. And it's produced more millionaires and it's produced more investment success than any other asset in regards to gains in the period of time that it's on the market. And whilst that won't last forever, it's definitely has been true for what we've seen to date. And so why would we not want to have some exposure as opposed to none? And we don't need to break the bank. We don't need to have 100% into this market. What if we had 6% or 3% or 10% allocation into an asset class that has proven to be so successful and so generous to investors? So I always say it's more so than like if we sit and listen to naysayers, we sit and listen to general fears that are often not backed by a lot of, I say very politely, education, or maybe a better word is understanding of this asset class. Often people can miss out on tremendous opportunity within this market. And I've seen that time and time again with many students that simply just wait out of fear. But I always say some exposure is better than none. And whilst we might want to be diversified and have other assets, it's certainly worth having some skin in the game.
We've seen a recent rise in cryptocurrency-related products, particularly in the form of ETFs, exchange-traded funds. What are they, and what are the pros and cons of ETFs?
Yeah, I say this is the ultimate silver lining for crypto. And I've been speaking about these ETFs like I got turning blue in the face about them since about 2019. And I was saying that when they are finally approved, we will see one of the largest institutional fueled crypto rallies to come, mainly because they've just opened the door to an entire market that would never have considered cryptocurrencies in the first place. So to put it simply, in 2023, all of these big players in finance, I'm talking about the most traditional players, BlackRock, Fidelity, Van Ark, all of these, for example, they lodged their applications to provide retail services. So what they wanted to do is tap into an opportunity where they could allow investors to buy Bitcoin easily and through a regulated fashion. But the SEC, which is the Securities Exchange Commission, basically came out with their big regulatory hammer and smashed it down multiple times and said, no, until January 11th this year. And the recent price action we're seeing with Bitcoin has been a result of that approval. So there was 11 ETFs approved. And to give you an idea of just how record-breaking this is, in 2023, there were 500 non-crypto ETFs launched in the markets, and the total trading volume was about 0.45 billion in total for the whole year. And the ETFs on day one was in the multiple billions, and just from day one of their trading. And I think just in the last few days, it's been about 30 billion of trading volume just in one of those days. And there's nothing that's been paralleled to it. So all of that has propelled this market into where we are now, which Bitcoin is sort of just tapped over its previous all-time high, and it's all very exciting.
In the book, you investigate the concepts of trading versus investing. What's the difference? What is the difference in risk?
So I'm actually a big believer in investing in long-term buy and hold strategies. Personally, I don't teach trading as a strategy. So that means you take a lot of the risk and a lot of that sort of late night and lots of coffees type stereotypical investing strategy. The thing with the crypto market is that it's a 24/7 market. Any moment of any day, you can be sort of trading. So there's another stress element that comes with that. And also you want to be knowing what you're really doing, especially if this asset class is new to you. Trading, in my opinion, is probably not the first protocol. And what this does is then allows any investor with any age, with any experience to enter, because they don't need to be a trader to get into this or be successful. An investment strategy, which is different to trading, is where you buy a set of coins or a set of cryptos at the right time before the market takes off, and you let the market do the heavy lifting for you. So then you pretty much time your exit around when things are looking really well and your portfolio is sitting well, and you get out and you buy back in when things are cheap. And it's a simple philosophy, and you have to have a bit of opposite thinking, so not be buying the hype. But that's what I call an investment long-term strategy, and that's proven to be extremely successful for students over the years.
Your book is full of stories about students, as you call them, investing in cryptocurrency. We often hear about the success of cryptocurrency investors, and there are many examples in your book that you give. There aren't many stories of the downside, the investment's gone wrong. How do you counter that argument?
Oftentimes there's a few reasons where investments go wrong. And oftentimes it's when people are giving authority of their crypto away. So they're getting caught up in what I call the shiny object syndrome that happens in crypto. So that's the applications or the brokerage firms or the third party, anything where you are giving something of yours to, there is huge amounts of risk in the crypto space. So I'm a huge believer and promote heavily in what we call self-custody, where you own the crypto the entire time. You're privately managing that yourself, and that's sitting in your custody. Basically, you have what we call the private keys, which is like the password to your crypto. So there's a huge piece of the risk. The other big risk is our human emotions and what we call buying at the top. People chase euphoria and they buy right when the market is sitting right at this all-time high. And I don't believe we're anywhere near that phase just yet. We're still months away. But I believe the other mistake is they buy into the euphoria and they chase what we call pumps, which mean they're looking at the price charts, they're going up and up, but they don't realize that they're potentially locking in losses for years to come. And that's often where you hear of, people sitting at huge losses, or they lost 80% of their portfolio. It's because they bought the top and then the entire market retraced. This is why understanding where you are in the market is more important than the coins that you're going to buy. And if we can place maximum upside in front of us at all times by entering into the market at opportune times, then you're going to have a much better success. And you're really going to significantly minimize those sorts of downsides that you hear about within crypto. But I could give you another half a dozen examples, but they're probably the two main ones.
Bitcoin is in the throes of a very strong rally, recording, I think, something like a 48% jump over the last month to reach a record high. Ethereum has experienced a similar rally. Why is cryptocurrency subject to such volatility? And is that something that should concern investors?
I love this because I talk so much about volatility in the crypto market. And if I could share one thing, is that volatility is the price we pay for gains. And it is actually the single biggest and greatest feature of the crypto market, contrary to popular opinion, I should say. But the more you dig into the market, the more you realize that volatility can be played to your advantage in a significant level. And it is one of the key characteristics of the market that actually allows for people to make the types of gains they do. So whilst, yes, your portfolio can go through fluctuations, it's also negligible compared to the gains that it can be made by investing at the right times and into the right particular cryptocurrencies in a market. Volatility is scary and it does put people off, but if you could change that mindset to thinking volatility is actually the winning ingredient in this crypto market, the only winning ingredient, then you will really see there's a bigger opportunity at bay.
And is the volatility of cryptocurrency in any way different to the volatility of, say, the stock market?
Well, this is the thing. I mean, crypto gets a bad name because the media come along and they say crypto this, crypto that, the volatility, blah, blah, blah. But then you look at broader markets and you can almost track the movement in the crypto market against, the tech shares or whatever, or NASDAQ, so you've got this parallel where we're actually seeing a lot of correlation between the performance of the crypto market, even though the performance of the crypto market can be on a more significant scale in terms of gains. But you look at the overall price trajectory and the market patterns, and they can be very similar to other traditional markets. So you look at property rotation and how that, GFCs, and then if we get property booms, and there's volatility in every market.
One thing that stands out in your book is your encouragement for readers to be what you call contrarian, but also to do good research. What do you mean by contrarian? And what kind of research do you recommend before entering a cryptocurrency market?
Being a contrarian is the number one skill that any crypto investor can have, because that is the thing that controls our emotions. So be opposite to groupthink. And when everyone's doing the same thing, no one's thinking. So if everyone's buying in, and when Bitcoin's sitting at its new all-time highs, then everyone is often highly emotional. And that is often the time of maximum financial risk. Whereas if we can be a contrarian and buy when it feels the worst, often that's when we make the best gains in crypto. So to be a contrarian, in short, just means to flip the narrative of how you enter this market. And the research is to be able to explain very basically just a little bit about the cryptos that you're holding, and to understand that there are many thousands of cryptos, but not all of them are good. So research means what growth sectors, like where is the innovation coming from? Where is the development, and how do I get exposure to that development? If there's something that is going to completely change the landscape of the crypto horizon, how do I hold the cryptocurrency that's pegged to that development? And if I have some exposure to that, I have the potential to be part of that innovation and growth. And that's where the research really comes in. So there's fantastic growth sectors. Anything that's expanding on the network is in my opinion, a great investment.
When you talk about growth sector and a cryptocurrency that's pegged to that growth sector, what are we talking about there? What is the growth sector, and how do we know that a cryptocurrency is pegged to that growth sector?
An easy analogy would be to think of Apple and then think of the innovation that they're doing. So they're all of a sudden now coming out with headsets. Then they had Bluetooth headphones, they had laptops, then they had these little laptops that you could put in your, pretty much in your back pocket if you wanted to. So that was the innovation for computers. And that's just one example. But then you've got cryptocurrency, and it's saying, okay, so how and where is the innovation coming from? So where are the apples within the crypto space that I can basically get exposure to? So I'm now holding an asset that's pegged to the innovation and pegged to the growth. So for example, if there's a crypto that allows me to borrow against my cryptocurrencies in the form of a loan. So I'm now using my crypto as the underlying collateral, as opposed to, you normally go to a bank and borrow against your home. But what if we could do that in crypto? And you can now. So how do I buy that particular crypto that represents the company that is providing that innovation and that incredible service? So I'm going to ride the up wave of that utility, of that amazing innovation and infrastructure that's being built. So I look for, where is the innovation, where is the growth? And it's not just in the sort of the bricks of the crypto space and the building of the castle, as we could say, but also in things like metaverse, AI, all of these sorts of things are huge sectors that are also coming out and providing cryptos that you can invest into that are pegged to developments in AI. And we all know that's going to be a huge sector in this market as well.
Fortune favors the bold, but also the patient when it comes to crypto. Now, that sounds like a good and well thought out strategy. How does it apply to investing in cryptocurrency?
It is a great strategy. And this really comes down to that, what I was referring to, the difference between trading and investing. It's the long-term traders. And there's a saying in the crypto market that longer pays better. Patience pays off. If we can hold, and many people have been able to acquire even something as a retirement, an early retirement in 2 to 4 years. And 2 to 4 years, people think, oh, that's too long, I don't want to wait for that. But how quick does 2 to 4 years go? And here we are in 2024 already. I mean, how fast has the last few years just zoomed by? So I always say that if you're willing to be patient and let the market do the heavy lifting and choose your timing, you then really can sit back and let everything happen in front of you, rather than sort of being very attached to that. So being patient, and then also taking those sort of profits at the right time. All of this requires patience and a good attitude.
You also write about a portfolio of cryptocurrency. What are some of the other cryptocurrencies we should be aware of, and what might a cryptocurrency portfolio look like?
Great question, because for many new investors, they might think it just means I buy Bitcoin and I'm in the crypto market. But Bitcoin is such a fraction of the big iceberg that is sitting underneath the water. So you have Ethereum, which is set to do have great performances, many things contributing to that this year. You've even got new blockchain technologies coming out like Solana, like Pulse Chain, two great cryptocurrencies. Then you've got the whole AI and metaverse sector. You've got new blockchains coming to market. So all of these, what we want to do is aim to hold 10 to 15 cryptocurrencies, no more. We have some people that arrive at our front door and say, I've got 200 cryptocurrencies. I'm like, how are you managing all of them? Because everyone is like what I was talking about before with the apples of the world. If you have 200 Apple shares you're tracking the performance of all of those companies and what they're doing. So having 10 to 15 is a great starting point. To be diversified across a whole range of different sectors, like we've spoken about, and have a significant section into a conservative play like your Bitcoin and Ethereum. And then you're well diversified and you're ready for a bull market, and you're not over invested in just one cryptocurrency.
In the final chapter of your book, you write about a thing called financial sovereignty. What do you mean by that term?
Financial sovereignty, in my opinion, is really the end game, because in the end, many of the struggles I see in today's world and in people's lives is revolving around money predominantly. We live in a world with increased price pressure around us on multiple fronts. And I often say many times to people, how do people survive today? And then what does the future even look like? And how are we going to access the same lifestyle we have today? And will that be dwindling? So financial sovereignty is about doing something different to create a different result. So then we live our life on our terms. And I have a very strong belief that true wealth is in our time and our ability to live in alignment to our service and our passion and our purposes in life. And financial sovereignty for myself is personally life on my terms. And cryptocurrencies has done that for me, for my life. And that's why I put this book together, to inspire people to share that this is 100% possible. And only a few years ago, I was an average Australian income earner, never dreamt of the possibilities and the freedoms that I could be granted today, and also the sovereignty that has presented for me in my life. So I'm very passionate about what crypto can do for people, and that's why I speak highly on personal sovereignty.
Sydel, it's been great to talk to you. Very interesting conversation, and thanks so much for joining me on the Good Reading Podcast.
Thank you, Greg. Thanks for having me.
I've been talking to Sydel Sierra about her new book, All Time High: The Power of Cryptocurrencies and How to Invest the Right Way. It's published by The Kind Press, and you can find it at goodreadingmagazine.com.au. My name's Greg Dobbs, and thanks for listening. This Good Reading Podcast was brought to you by Book People Gift Cards. Share the joy of reading with a Book People gift card. To find out more, visit bookpeoplegiftcards.org.au.